Welcome to another episode of Your Voice Matters. So happy Sunday to everyone. I'm your girl, Viv Cunningham, with Preferred Real Estate Brokers selling the American Dream here in Central Florida, living in Central Florida. So today I have two realtors, my friend Neville, my friend Beverly, and then I also have Michele on here that I promised you guys that we're going to be bringing on, and we're going to be talking about one of my favorite program here in Florida, and it's the Hometown Heroes program. So if you guys have any question, please don't forget to send it in the chat, or if not, we can always reach out to Michele later on or another time about any questions that the audience have not and we have not answered. But so happy to have you here. I'm going to introduce Michele to you. Michele is a dear friend of mine. And when she goes to the Ocho Rios restaurant in Claremont, she always call me and says, I'm ordering the Viv special.
So it's delicious too.
And I had somebody asked me at church today, and I told them, go to Carol's Ocho Rios off of Highway 27, not too far from the Legend, Hardwood Marsh Road. And I said, so she said, what do you have when you go there? I said, well, I usually have the Viv special. So, when you go to Carol, make sure you tell Carol that you want the Viv special. The Viv special. I said, yep, the Viv special. Because a lot of people are going the vegetarian, vegan way and stuff like that. But I'm so happy to have you. Carol introduced us, and I'm so happy that you are in my life. And what I like about you is that you listen. And I like that I can tell you anything and you don't get upset. I like that I can voice my opinion to you, and I like that. Absolutely. But I'm going to have Neville say a few words, introduce himself. I'm going to have Beverly say a few words and introduce himself.
Hey, Bev, you can go first.
No, you go first, Neville.
Don't start that.
All right.
Just do it.
My name is Neville Smith. I'm with Preferred Real Estate Brokers. I'm a realtor here in Central Florida. And Viv and me, we go back a bit. And like she says, she pretty much tells it like it is. And sometimes you may get upset with that, but she's not trying to sugarcoat anything. She's just leading you down the path that you need to get with. That's it.
And that's what I like about Michele, because I don't have to sugarcoat it with Michele, because I know her. She and I have gone out to lunch. She and I have gone out to events. And that's the way it should be. We should be open enough with each other that we don't have to sugarcoat something, because I learned from you and you learned from me.
Absolutely.
So Beverly, go ahead and introduce yourself.
Hi, I'm Beverly. I'm a realtor. And I'm glad I'm on this podcast today to learn. I'm always learning. That's my goal, that I should learn something every day. And I hope to learn a lot from Michele today.
All right, Michele, let's kick it off.
Let's kick it off. Well, let's say first, I'm happy to be here. Hello to Vivian, Neville, and Beverly. I think this is my third or fourth time on to Your Voice Matters, a wonderful platform and podcast, and it continues to grow. Viv, my sentiments exactly too. So again, if you're an Ocho Rios, anyone, ask for the Viv special. The owner, Miss Kara, said she just needs to put it on the menu. So, but anyway, that being said, as Vivian mentioned, one of her favorite programs is the Florida Hometown Heroes Down Payment Assistance Program. And a lot of you that may be on here, what is the Florida Hometown Heroes Down Payment Assistance Program? So just to give you a little bit, I won't kind of bore you with the legislation and the numbers and all this stuff, but this program is offered through the Florida Housing Finance Corporation, which was established about 40 years ago through our state legislature, the Florida State Legislature. And it was established to assist and to build affordable housing opportunities for the Florida constituents. That being said, Florida Hometown Heroes was enacted last year, June of 2022, and Governor DeSantis did approve it to be funded with $100 million. So that $100 million the program went so well, that $100 million was gone within a year, basically. So July 1st, the program was refunded with another approved $100 million with some tweaks. So the Florida Hometown Heroes, when it was introduced last year, it was limited to just certain occupations. There were like 100 plus occupations in the healthcare field, in the education sector, military. Well, now it's open to all occupations for Florida residents, which is really nice. So we have this $100 million in a pot again, right? But it's open to everyone. So the major changes, if you will, in the program is that, more funding is available now. And as I mentioned, there's more opportunity. It's available to everyone. So that being said, let's go over who can apply now. So right now, again, if you are a Florida resident and you work for a Florida-based company that has brick and mortar, has had brick and mortar in the state of Florida, you are eligible. If you're full-time working 35 hours a week, you are eligible. So it has to be a Florida-based company. Remember, these are Florida funds, right? So you have to be a resident of Florida. It has to be a primary residence in Florida, and it has to be a company that you work for in Florida with brick and mortar. If you are self-employed, have a Schedule C, home-based, a lot of us have home-based businesses. If your Schedule C has a Florida residence, that's good. If you are self-employed and a 1099 contracted out, then that contracted business that you have partnership with has to be based in Florida. So Florida is the key there. What are the requirements for the program? There are income eligibility requirements. So like many down payment assistance programs, we're going to be looking at the area median income for that county that you're going to be buying the house in. So there's a chart for that. So, we can basically answer questions and drill it down. What is the AMI for your particular county? But for this program, it's typically less than 150% of that designated county that you're looking at to purchase. You do have to be a first-time home buyer. First-time home buyer does not need to be one and done, that you bought a house once. It just means, that's kind of a misnomer, kind of, confusing. But if you have not purchased a home in 3 years, it resets. So you are considered a first-time home buyer. So first-time home buyer is a eligibility requirement, and there is a FICO score of 640. Okay. So if you're a little bit below that, then of course you can work with your experts in building that up, or Vivian and I can also help you with that if that's not there. And then there's a DTI requirement, your debt to income ratio. For this program, no more than 50% of your debt should be going out. No more than 50% of your income should be going out toward debt. So 50-50 there. So that is the what for this program. So we went over the who can apply. We went over the what, the when can you apply? You can apply right now. The sooner, the better. I would say apply today when you finish hearing this podcast. Just think about it. If the funds ran out $100 million in a year when it was limited occupation, now it's open to everyone. We don't know how long these funds are going to be available. And these funds are non-reoccurring funds that are distributed by our legislation. So we don't know if it will be replenished again. Fortunately, it was replenished for 2023, but the sooner the better. And so number 4, what about how? How do you go about applying? You can apply with a lender like myself that's registered with the Florida Housing Finance Corporation, and work with a realtor like these lovely folks here, Viv, Nev, and we can just go ahead and get you started on that. The application process is your typical application process for any government mortgage program. So when you say Florida Hometown Heroes, basically they have the funds to give to the lenders to kind of, work with doing the underwriting and so forth. So you're going to be eligible for the first mortgage and for FHA, a VA, or USDA loan. So that's the first mortgage under that umbrella. And then the down payment assistance comes under the guise in a 0% non-amortized 30-year second mortgage. Have to kind of think through that through my mind. Say that 5 times, right?
Mm-hmm.
So it's not, everyone listen, it's not free money. It's not a grant. It's basically a loan, but you don't have to pay it back right away. So it's only due when your loan matures or if you refinance or change the title. Otherwise, it is given to you and you do not have to make any payments. If you like to make payments on that second mortgage, you can, but it's not doable. It's not due at any time. So it's deferred. So you don't have to worry about, if you got $35,000 of paying that back right away, which leads me, because I did not say how much you are eligible for down payment assistance. That is one of the changes from last year. Last year, the maximum cap was $25,000. Now it's $35,000. So it is 5% of the total cost of the home, or 35,000, whichever amount is less. So, for example, if your a client found, or you as the borrower found something for 300,000, 5% of that is 15,000. So you would get the 15,000 because that's the lesser of the $35,000 cap. So that's about it in a nutshell. There are other programs that are available under the Florida Housing Finance Corporation. As I mentioned, Florida Hometown Heroes program is one of those programs, but they do have other programs called, bond programs and the TBA programs, which is the bond alternative. So if we have a client that does not qualify for the Florida Hometown Heroes, we can look at one of those other 2 programs, but they have more stringent guidelines and requirements. I really want to share at this time, everyone's not eligible for down payment assistance. Just to kind of share, I had a client that it has a $1,600 car payment. And so affording a $1,600 car payment, you're going to make a good income. Well, these down payment assistance programs are for the extremely low to the very low to low to moderate income. Mm-hmm. So you can't make a lot of money. Okay. So that's why it's under the guise of affordable housing for those that may, have some challenges with income, but have the rest of the everything else in the bucket that they can work with.
Now, the Hometown Heroes program is, and then you were talking about the other bonds and grants. Are any of those stackable?
That's my question.
Very good question. They can be, but when you think about stacking, then the other lender, if you will, or entity would have to be willing to take third lien place. Keep in mind, under the Florida Hometown Heroes, the loan, the first mortgage is just that. It's going to be a FHA loan, a VA loan, or a USD loan. And the second loan is that 0% deferred, right? So if there's going to be anyone else that's going to give money, that's a third place. And a lot of folks don't want to take third lien position. Not that they're not out there, but they have to be willing to accept that. And then again, they would have their own requirements of for eligibility if the borrower is approved in that area.
Okay, so all right, great. Somebody is asking, can I obtain a quadplex? Can you hear me, Michelle?
Yes, a quadplex, multifamily. Let's see here. So the Florida Hometown Heroes is for primary, first-time, owner-occupied, first-time home buyers. So if you're going to buy a multi-unit, so a quadplex would be, right? You can get an FHA loan for a multi-unit up to four units. But again, it would have to be owner occupied. This is not set up for investment property or your HGTV moment, flipping, making some kind of investment income. So yes, that is possible, but it does have to be owner occupied and meet the guidelines for FHA for that multi-unit.
Okay, cool. That was Leon Orange.
Good question.
That was asking that question. Okay, so
got a quick one.
Go ahead, Neville.
And I know you said it in there, but I just want to solidify it. The 5% or $35,000, is it on the price of the home or is it on the mortgage?
It's the sales price of the home.
Okay.
Right. Okay, so that's good. Sales price of the home. Okay.
Mm-hmm.
I know it was just funded, I think July 1st again, and just like you said, within a year that money ran out. Now, is there a certain, so is it another 100 million they gave again, or did they give more?
It was another 100 million. So the first, so mind you, this program was just set up June of 2022. So it's brand new under, and DeSantis approved at that time 100 million. So that 100 million during the offset, the infancy of the program was gone like in June. It was gone in a year. So they had a wait list actually prior to legislation renewing for another 100 million. So this is going to be 200 million in the program's inception. But this is non-reoccurring funds. So that means when these funds are out, there is no guarantee if it will be replenished equal amount as the prior 2 years, less amount, greater amount, or if the program will be, dissolved. We don't know. So that's why, you want to take advantage now, anyone that's out there, while these funds are available. Also, one of the good benefits with the Hometown Heroes is that they're basically a lower market rate for that first mortgage. It's a competitive rate. It's going to be a lower rate than your typical lenders. Probably won't be, where to the builders are, right? Right now, home developments and builders are not lenders' friends because they have their in-house lending. But but we could definitely compete with using the Florida Hometown Heroes program because it is a more competitive rate.
Yeah,
and
but
lower closing cost.
Question, Michele. What's the income guideline? Do you have a figure for that or figures?
There's a chart. So the income guidelines depends on the number of folks in the household and the county. So I can definitely send it. Sorry?
You said and the county.
Right.
Household
The county where the house resides. Yes.
Oh, I see. Okay.
Yeah, so there are AMI limits for that particular county. So you can actually go on, if you Google Florida Hometown Heroes Income 2023 guidelines, you could pull it right up. If I were to pull it up on my screen, would you be able to see it, Vivian, if I pulled it up from here or no?
I'm not sure if you're able to share it or not.
Okay,
but,
no problem.
You can send a link to Beverly where she can go get it from.
Yeah, that's nice.
Because I thought last week I sent it to you.
No, I didn't receive it.
Okay, yeah, because
Okay.
I pulled it up last week because remember I told you it went from all the way from Alachua all the way to Washington County, and I didn't even know in Florida they have a county called Washington County.
Yeah. So but you could just Google it too, Beverly, and it'll pop right on up. So it is public information under the Florida Housing Finance Corporation website.
Okay.
Yeah.
But it varies. It varies from county. Mm-hmm.
So what it says don't wait. Don't wait because the money is not always there. A lot of people think that what will happen is if money is there that somebody's going to save it for you. No one is going to save it for you. When it's depleted, it's depleted. Now, at your company, Michele, do you have anyone that, let's say their credit score is not 640, okay, and let's say it's 600? Do you have anyone that can help them with repairing their credit or making their credit better where they're able to get it past the 640?
Mm-hmm. Great question. I, as a loan originator and, folks on my team, we do kind of assist with giving some basic things that borrowers can do to increase their credit score. One being, open up another trade line or account or credit card, and don't use it, of course, but that will kind of decrease your utilization percentage, and that always helps. Also, another quick fix is, paying down and or off your credit. But if you need more extensive help, a lot of us do partner with credit repair specialists that we can definitely make a recommendation as well.
What do you mean don't use the trade line? Open it up, but don't use it. How is it going to help you if you don't use it?
Because it's going to give you a larger amount of credit available to use. without you using it. So it's going to decrease your utilization. Your utilization should really be low, less than 40%, 30, 40%. So if you're at, let's say 40%, and then you open up a new credit card for about $10,000, that's going to give you additional money to use that will decrease that utilization percentage to, can't do the quick math, I don't know, 30% or 35%, just depends on, what other debt that you have, but it will definitely decrease your utilization, which at the end of the day is, better, especially when buying a house. You want a lower or lesser utilization percentage.
Okay. Now, lately, you and I have been running into issues with underwriter. When you come back and says, okay, these are the preliminary things that the underwriter is waiting for. Now, what are some of the things that the underwriter is looking for on a loan like this with the hometown heroes?
It's the same underwriting procedures. And basically every loan and every borrower has a different loan scenario, a different situation. So there's never two loan scenarios that are the same. So you may have someone that filed for bankruptcy a year or 2 years ago. You may have someone that is going through a divorce, and you may have someone that owns a property, and with a former a spouse or partner, they're getting ready to sell. You may have someone that has defaulted on student loans, and have to make arrangements to pay that off. So every scenario is just different. And sometimes, I like to really encourage borrowers to kind of, tell the story. As lenders, a lot of times we are playing detectives and have to find out what is really going on in the financial scenario here with the borrower. And it's almost like unpeeling or peeling layers of onion. So, and borrowers could get frustrated with lenders, and lenders could get frustrated with borrowers, but this is the process. And it may be, you just don't know what you should share. But because this is a large financial transaction, every little thing is looked at that's dealing with, your credit history, the debt that you have, any of your financial situations. We need to know, because that's going to help mitigate the risk, or, in your favor or not in your favor. So a lot of times the lender won't know what we need up front, so when we get to the underwriter, where it's really looked at with a fine-tooth comb, they're uncovering things that, we didn't see this, or we didn't know about that. We're going to need this. So a lot of times I like to tell my borrowers, fasten your seatbelt. There may be some things that are asked that you don't know we're going to ask of you, but just be prepared. I do like to say these are things that, are general or universal that we'll need at your fingertips, your tax returns, your pay stubs, your ID, your asset statements, whether it be a 401k or some type of pension account. But there may be other things that may come up along the way that will need extra information, extra statements, or extra tax return to kind of help the journey.
Like a letter from your job.
Like a letter from your job, exactly. It's like right, exactly. So we're just to kind of help us out, our in this real estate space, the lenders and the realtors, Mr. and Mrs. Barr, we're your quarterback. We're here to help you. We want to see you get to the finish line. It's not a fight at all. So if we ask you for something, it's for your benefit, for your good, because we want to get you to the finish line. And you don't know a lot of things that are going back behind the scenes. I like to say there's that, the Wizard of Oz, remember there was a big screen and you don't know what's going on back there. Everyone's kind of working, and, there's underwriters, there's transaction coordinators, there's loan origination assistants, you have your lender. So it's a lot. You have your realtor, you have the seller agent, the buyer. It's a lot that goes on. So just work with us to make your dream a reality.
Yeah, you're so right about that, because there's so many moving parts to this. But I'm one of those. I stay in my own lane. I understand a little bit part of the lending, but I am not one of those to give advice. I said, go back to the lender and ask the lender if it's a number. People will call me and ask me, what are my closing costs? I said, your lender is the one to talk to. Always remember, guys, send the buyer back to their lender, because don't try assuming, thinking that you're the lender, you know too much. With me, I always says, tell them the things that that might happen, just like you're doing. You're telling them the things that might happen, because we might, sometimes I might blame the lender and say it's the lender's this and it's the lender that. The lender should have known this. You should have known it before, because that, because you're the lender. You should know that maybe they're going to need a letter from their job because it's an FHA loan. Like insurance. What are right now with me and the inspection, I tell the inspectors, I tell the inspector that the buyer is going to need the regular house inspection. They're going to need the 4-point, depending on the age of the home. They're going to need a termite, because whatever bond that you're getting, they might ask for it, and they're going to need a wind mitt inspection. So I'm usually telling them about those inspection. Now, what are right now, you and I are dealing with buyers that what are some of the inspection that the underwriter are looking for?
Basically, inspections are not required on the lending side. The appraisals are, but not the inspections. So the inspections are more like peace of mind for the borrower. And then also the additional inspections that you mentioned, like the 4-point and the wind mitigation, are more for like discounts for on the insurance side, and where the insurance company may require a 4-point if the property is over 20 years old.
So why are some of the programs that I'm dealing with right now are asking me for the inspection report?
Which program? Well, and I don't want to speak for all lenders, but
right.
typically inspections are not a lender requirement. If you notice, when you get to the closing, there's in their loan document package, it really stresses, if the borrower has not gotten an inspection, to go ahead and to get one. Is for their benefit. Again, usually the appraisal is definitely a lender requirement, but if there's certain programs. There's various loan programs out there with lenders can offer, and maybe some other programs at county levels and at the state level that may require. But generally speaking, it's not a lender requirement.
Okay, yeah, I guess it just depends on who. Because I just had one that asked me, they wanted the inspection report, and they looked at it, and I know Orange County is one of them that they want the inspection report.
Yes.
They want to see it, just make sure that the windows are working, the doors are working. So, I always recommend that that you get it done. Now, with this Hometown Heroes program about bankruptcy, how many years, let's say, you say that you can be having owned a house in 3 years. What about bankruptcy with this program?
So the programs are still going to follow the guidelines for the government agency programs, whatever they are for FHA, USDA, or VA, and they all have their different guidelines for bankruptcies. So they're not all created equal. So it just depends on what type of bankruptcy, and it depends on how long the bankruptcy was discharged. That's really a fully loaded question. We basically have to wait and see until. Again, it's a scenario where it depends on, the type of bankruptcy and how long ago it was, and, the underwriting guidelines for that particular government agency. So I can't just kind of give you like a cut and dry answer on that.
Mm-hmm.
But of course, the longer your bankruptcy is discharged, the better it is for the borrower.
Okay.
Question, Michele.
Yes.
Is there a guideline on residency to qualify for the hometown loan?
Residency? No. How long they have to be a resident in Florida?
Yeah. Mm-hmm.
No, there isn't. No.
So if you just move here, you can, and you show you have an address, you
Yes.
can basically get the loan.
Right. So, well, now that you get the loan, is just meeting the eligibility requirements to apply.
Yes.
Yeah. So the first thing we want to do, when we're talking about Florida Hometown Heroes, are you eligible? Are you eligible? Do you have a 640 credit score? Are you a first-time home buyer? Is it going to be a primary residency in Florida? And do you work for a Florida based company?
You have to work.
Mm-hmm.
Okay. All right. Gotcha.
So can you get be on disability or workman's comp?
That's an income question, or income that's in the income bucket, if you will. So I mean, you can still apply, and that could be listed as income. and we're going to take that income in consideration, whatever the source is, compared to your bills, and see if it meets the DTI eligibility requirements.
So long as you have the funds coming in, depending on where it's coming from, if you're, you're
it doesn't matter if you don't have an employer once you have the funds.
Because you could be, let's say you were collecting Social Security.
Mm-hmm.
Yeah, Social Security is income, right? So we won't discriminate against that. So you look at income from all avenues compared to the debt. How long is the income consistent? Is it something that's legitimate? And then of course we're going to look at that compared to your liabilities, and can you afford the payment of the proposed property along with all of your other debts.
One more thing to add to that. I thought one of the requirements also is that you're a full-time employee of a Florida-based business.
That's not just I understood it too.
So that you got to be full-time, 35 hours plus.
That's correct. Yep, full-time employee in Florida, at least 35 hours a week. And if it's a joint applicant, only one of the borrowers have to meet that criteria. That's fine. Mm-hmm.
Lately we've been, for the past couple of years, we've been having insurance issue. I just heard that Farmers Insurance has pulled out of Florida, and it's affecting at least 100,000 policyholder. Are you seeing that closing the loan? Are you seeing that you're having any issue with getting policies for the buyers?
Not really. I use two different, sometimes three referral sources for insurance. Actually, Movement Mortgage, we do have our own internal insurance company, and then I have a couple that are based out of Florida. And I always, this is a shoppable cost for the borrower, but I always provide that for the borrower and go with the lesser one. And then of course they have the opportunity, they can find something else. But I haven't run into a problem yet. The only thing is, where I'd like to maybe get maybe a fourth or fifth quote is if, someone is really kind of close with that debt to income ratio of taking them over, whatever that maximum is, that would kind of help with bringing that down and getting that approved for them. But as far as turning down, or, the bottom line is it's just insurance expensive, right? But it is out there. So, but I haven't run into a problem of seeing where someone was not insured for whatever reason. Not yet.
Yeah, thank you for sharing that insurance stuff with me, because right now I'm having issue with cash buyer getting insurance, things like that, and it's kind of expensive. Today I was just on the phone with one of the listing agent, and they were talking about the buyer said to me, "Oh, this insurance company wants me to pin down the four corners of the roof." So I talked to him today. He got the estimate to pin down the four corners of the roof cost $6,000 to $7,000.
Oh my gosh.
Every day you hear of something new about something. So I told her, I said, that's not worth it. That you can pay that, that's like 3 years worth of insurance for you. I don't really think that worth it. But, I said right away, they do the wind mitt anyway. So it tells you how the roof is pinned down anyway.
Yes.
But every day somebody comes up with something new about something. I don't know. It just seems like they nickel and dime you to death to take money out of your pocket. After a while, you get you get a little tired of it, of that insurance, the insurance issue. So, the governor says it's going to be fixed in 2 years. So I'm expecting that it's going to be fixed in 2 years. Right now, I call it Band-Aid on it, but right now everybody's having a difficult time, finding that insurance. But I'm hoping that sooner than later than the 2 years that it needs to be fixed. So
yes.
But you guys have any other questions for Michele? There you go.
Oh, Michele is gone.
Michele, you're on. You're in two different screens. You're on something different now?
Yeah, I do apologize. I had where my computer was about to restart, so I didn't want to lose you. So I'm trying to.
All right, that's cool. All right, that's fine. All right.
Michele,
Yes, ma'am.
Will there come a time when you do not have to repay this loan?
Right now, that is not how the parameters are set. This is a deferred loan. It's not a grant. It's not going to be forgiven. Right now, it is repayable. It is repayable at the time that the loan matures, or at the time that maybe the property is, sold or refinanced, or when the title changes. So this program is set up to basically pay it forward, if you will. So when these second mortgages, these second 0%, 30-year non-amortized loans are paid back, then the money is put back into the fund. So they're made to kind of be self-sustaining, basically. So when the money is paid back, then they can use it again, for other buyers that are in need. So, but it is payable.
So if your loan is mature, then or you sell the house or something, you're going to have a balloon payment to make at the time of sale.
You have to pay it back. You have to pay it back when when it's refinanced or when the title changes. So whatever net proceeds you're getting from the sale of that house, and hopefully there should be some, right? Because appreciation, you're going to be paying back that second mortgage at that time.
So can it be factored in your payments over the life of the loan?
No, it can't. No, it cannot. It's 0%. It's a second loan, and it's 0%. For 30 years. It's non-amortizing, so there's no interest going on it, and it's not even due. We don't call a payment until those examples that I gave. So no, you can't factor it. However, if one would like to make payments along the way, so when one of those scenarios occur, when you do have to pay it back, and so it's a lesser amount, you can do that. Let's say if you get your tax return and you say, well, you know what, I want to put this on the second mortgage now, but it is not a requirement.
And if you refinance, you have to pay it right there?
Correct.
Right. So right now, a lot of the bonds are like that anyway. Where you it's 0% amortization. So it's okay. It's just like if you got a grant from Lake County for $7,000, when you sell that house, you got to pay back that grant. So they just take it from your proceed.
Yep.
Exactly. So it's not like say you're going to have to pay it out of your pocket. So they take it from the equity. So if it's $15,000 and you're making $75,000, they're going to take $15,000 out of that $75,000. That's how that works.
Yeah, but what if you're underwater?
Well, then you know what? Then you're going to have to do a short sale on that and work that out later. Right now, people are not worried about that. That's why the money run out so quickly. So they're not worrying about the underwater business right now because
not too many people are underwater in Florida right now.
Yeah, that's why the money run out so quickly because people are not really worrying about that. And then if you don't want that grant, if you don't want the hometown heroes, there's other programs, or you can just buy a house outright. You can put your 3% down and then get some closing costs. Sellers are giving some closing costs right now.
I don't like the balloon payment.
But that's just one person. That's you. Beverly, hold your head up so we can see you. Yeah, that's just on one person. That's just you. But look how quick the money run out. That means people are taking it. So it's not about you. You already owned your house right now. So it's about the people who are buying a house.
Yeah, this is the parameter set up for this particular down payment assistance program.
Right.
But there are a plethora of down payment assistance programs out there offered at the federal, state, city, and county levels. But all down payment assistance programs are not created equal.
Nope.
Yeah.
It'd be in the guise of like this 0% deferred non-amortizing. Some may be a grant, where you don't have to pay it back. Some outright loan where it is concurrently paid with your first. Some may be, forgiven after, so many years, it could be 0% second mortgage, but forgiven after 10 years of on-time payments. So there's all kind of different scenarios, and all these programs are going to be based upon, who's offering it and the guidelines. So some of the funds under Florida Hometown Heroes, which is under the umbrella of the Florida Housing Finance Corporation, a lot of this funding is coming through SHIP, the State Housing Initiative, right? And so I like to consider SHIP the mothership, you know.
Yes, yeah.
They just gave out money saying, here, County of Orange, here, City of Orlando, here, State of Florida, here's X amount of millions of dollars. You run with it. You create the program, you create the guidelines, you manage it, and then they're out of it. So, and that's why they're all down payment assistance programs are not created equal, and they have different parameters.
To me, if they had allowed proration in this loan, it would be more attractive. So like every year you knock off so much percentage.
But how much more attractive can it be than it running out of money?
I know exactly.
Yeah. How much more do you want to be attractive? They ran out of money, so that means it's attractive.
Right.
People are not worrying about that right now. They're just worrying about the rent that they're paying. Okay, they're $2,100 for a 1-bedroom apartment, 1 bath. They're worrying about that rent right now. So they'd rather go take this money and figure it out later. And that's why they ran out, and that's why it was replenished as of July 1st.
Exactly, I agree with Viv. It was wildly successful.
Right.
This is a year program, and they ran out of $100 million in basically less than a year. So they gave us another $100 million. And you know, I don't have a magic ball, but if they ran out of money in a year with limited limited availability to certain
exactly.
And now it's open to everyone, it may be gone
in 6 months, exactly 3 months.
So this is very
just knock on the door. That's all you got to do.
And available to for those that fit the criteria.
Well, I suppose there's something for everybody.
Exactly.
Yeah.
Yeah, that's what I said. It's not about you buying a house. You bought your house, Beverly. It's about other people buying a house. And this is helpful for them to get out of an apartment. So, just like I said, there's many different programs out there. You just have to find, with me teaching the first-time home buyers class is every first Wednesday, Thursday, and Friday of the month. Neville and I teach the class. And, they have to find, there's so many different programs that we talk about, and there's so many different lender that comes on, but you know what? Everybody find the right program for them. If the Hometown Era is not the right program, then there's Orange County that's giving $50,000. Okay. So, you just have to find out what program that's going to work for you. And this might not be for you. Okay, because you don't want a balloon payment at the end. And then, most of the programs are like that anyway, where, if you don't live in the house for a certain period of time, you got to pay it back anyway. And if you refinance, you got to pay it back anyway.
And that's my job as a lender, for our borrower land folks out there. There's no way, even for us, we don't know everything. And there's no way we can know all the parameters to all the loan programs and all the down payment assistance programs. But guess what? That's our job to research. So when Viv brings it to me, okay, where are they wanting to buy this house? Oh, they want to buy in Lake County. Okay, let me see what Lake County offers for down payment assistance. Okay, and then let's see, okay, what city in Lake County? Oh, Claremont. Okay, let's see what the city of Claremont, if they have any down payment, assistance available. And then if you can't drill that granular down, then we can look at the state level. The Florida Hometown Heroes is one of them. But yeah, there's something out there for everyone. But again, it's for that certain bracket. You can't be a CEO of BMW or whatever and expect to qualify, right? Again, it's for the extremely low, very low, and moderate income populations that we're here to assist.
And I'm glad that Orange County last year, they were only going up to 300,000. Now they've moved the price up to 350. So it's a better chance of someone finding a home. I took out a couple first-time home buyers class from the first-time home buyers class. And then one of them already got on the contract. So with me, and that was only 2 Saturdays. I took them out 2 Saturdays. So with the price, they're looking in the 350, low to income to moderate income, you're finding that there are sellers out there that's giving them a chance.
Nice.
There's and then the sellers are willing to work with them. And, I have a couple FHA and, down payment assistance under, but if sellers are willing to help them out, to if there's a roof need fixing or wood rot or something like that, they're just not canceling the contract. And I do thank some of these people, say thank you for helping out these first time home buyers, because most sellers are not giving them the chance. So I'm happy. I thank the sellers, and for just giving them that chance.
Nice.
Yeah, because it's not easy. We still have a shortage of the housing. Go ahead, Neville.
Oh, just a partial response to something that Beverly said, in the sense that she was talking about the fact that should be able to get it forgiven for a certain portion of the, if time goes by. You have that ability, because if you want to make payments on the loan, it's about $70 a month is what it comes out to. So there's nothing that says you can't pay certain parts of it, but you could also invest that money into some kind of fund that's going to give you more interest. So by the time it's ready, even if you're putting $70 a month into it, by the time 30 years has gone by, or whatever time period has gone by, you have more money to pay off that loan, that balloon payment.
Mm-hmm.
So there's ways that this actually benefits you, if you know how to use your money. That's all.
I thought about that too, Neville. Like
Mm-hmm.
putting, divide it into so many payments over the 30 years and put that amount into a mutual fund. And by the time you finish that 30 years, you would have a lot of money. And then you just pay that $30. But I ask these questions because I want to understand the whole thing, how the whole thing works.
You're
Absolutely.
not the only person that has that type of
Right.
question. So you're asking a question for somebody else that is not here. So, I was just
No,
providing another statement too.
but
Yeah.
other people are listening,
But that's what he's saying. You're asking that question for other people.
Yes, yes,
But
yes.
keep in mind, most people do not live in a house for 30 years.
Mhm,
Maximum amount right now is I would say 7 to 14 years.
mhm. But
After that, then you're tired of living in that house and you want to move on.
mhm.
Very true, Viv. Another thing to think about too is, again, I don't have a crystal ball. I don't think, Viv, you made a reference to the low inventory, and that's because a lot of folks aren't leaving their homes at the 2 and 3% rates, right? So
Mhm.
that's why a lot of people are buying. The builders are having such a feast, right? Because new construction is more abundant than the resale. But another thing to look at is that rates are right now hovering 7 percentile range, right? So if they go down 6 or high fives, low sixes, this is another option for someone that would be taking advantage of Florida Hometown Heroes if they were to refinance. Remember, when you refinance, then the second mortgage is due. They could possibly refinance and do a cash out,
Mhm.
a refi with cash out, getting up, some equity out and repay it at that time and take, whatever else additional to do home improvement or what have you. So that's an example too. So there's a lot of different ways that you can look at this to make it advantageous.
Yeah, create generational wealth. Take it and go, whatever. But rate, are you buying down any rates or anything like that? Are you seeing a lot of people doing that?
A little bit more on the builder side, but that could be like a seller concession too. If a seller is willing to, give some funds where the buyer can buy down the rate for a year or two, that's a possibility. I haven't seen it a lot, but it is out there.
Yeah. What I tend to do is depending on the person, I always ask the lender, does this person need closing costs? Because if they don't need closing costs, then I could go in a lot lower for the offer. But if they're getting the money from Hometown Hero and they're getting 5% of the purchase price or the loan price, right? Then are they getting 5% of the loan amount?
Right, it's 5%. No, 5% the sales price.
Okay, of the sales price. Okay, so if it's 5% of the sale price, then they will have plenty enough money for their down payment. So I won't need to. And if they have a little bit of money, because with Orange County, with it being something, let's say a bond, they were getting a grant or something for Orange County, and it's stackable. A lot of time they don't really need all that much money because they're getting the down payment and they're also getting the closing costs.
Mm-hmm.
So then I can easily go in a little bit lower with the asking price, to ask, since we might not be asking the seller for anything, or we might be asking the seller. I tell the buyer, says, if you are asking the seller for money, and you want closing cost money, then don't go in lower, because then the seller is not going to give you closing cost money and then also lower the price of the house. You got to be reasonable.
No, exactly. And just the caveat, just make sure everyone wants, here's this, because someone might be coming to intel. So it's 5% of the sales price or a maximum of $35,000, whichever is less.
Mm-hmm.
That's the caveat on that. But for folks that are cash strapped, another good thing that you can kind of present is your USDA loans.
Mm-hmm.
USDA loans are 100% financing. So you would have a borrower that would save, closing costs, but then could still get, they would save on that down payment expense, but then they can use the money garnered on the down payment assistance to go to closing costs. So they could pretty much come away with not paying hardly very, very little or hardly anything
out of their pocket. Now with the USDA loan, is it hard to qualify for that loan?
It is. It can be, because again, you have limit. You have income restrictions. You have DTI, restrictions that are, a little bit more, more conservative than FHA, right? And so, and then you have, certain areas that you need to find that property as well. So a little bit more things that you have to kind of, put pieces of the puzzle together to make that work. But it is available out there. So again, just like Hometown Heroes, there's a chart that just shows, actually it's an online tool that you could put in what county, or even the address to see if that property's eligible. And then for income guidelines, you can put in how many are in your household and what city and or county, and it'll tell you if you're eligible to go forward.
Yeah, I usually log on to that website as well, because I have a listing in Apopka, and it is USDA, so I usually log on to check as well. Yeah, I make sure it's someplace that I can Google it and log on and just put the property address in, and it'll tell me, yes, it's eligible for that USDA loan.
Yes. And then right on that same site, Viv, you have the income eligibility link too, that someone could just find out, oh, this is what I make in my household, and it'll tell you, yes, if you make too much, or if you make just enough to proceed.
Mm-hmm. Right. So yeah, that's pretty good. But now, is there anything that we didn't talk about when it comes to these down payment Hometown Heroes program? Is there anything that we left out that we need to tell the audience?
I had a question.
Go ahead.
So it's not necessarily left out. So the down payment assistance, Hometown Heroes, can you also utilize that for closing costs?
Yes.
You may have mentioned it.
Payment and or closing costs.
Awesome. Is there anything else that you can use it for? Is it just those two things?
It's just those two things. That's a good question that you asked, because I had a scenario a few months ago where they wanted to use it. One of their underwriting conditions was to pay off some debt.
Mm-hmm.
You cannot use down payment assistance funds to pay off debt. So yeah, pretty much you're locked into those two: closing costs and down payment.
Okay. It's good stuff.
Mm-hmm.
Beverly, I don't know where you are. Neville, you're talking with your thing muted. Beverly, did you have any final question for Michele?
No, I don't have another question. I kind of asked my questions during the presentation, so I don't have another question.
Well, this is really good stuff. Neville and I go out to new construction weekly and things like that to visit them weekly. But a lot of the first time home buyers, they can't afford the new construction home, so we have to go to the resale and do the resale that they're able to afford. And a lot of time the new construction, there's a few new construction in some of the low to moderate area, there's not that many. You might find that somebody find a lot in the 32808, 3211 or whatever zip code, and they're building a house, then they might be qualified for some of those programs. See, can a vet get a VA loan for down payment and HHA for closing? Can a vet get a VA loan? Yes, a vet can get a VA loan for down payment. Yes, you can use that. But and what HH for closing? I don't know what she's asking.
I think hometown.
Hometown. I think it's a
Oh,
hometown.
are you talking about hometown era? You can't combine them, right?
Oh yes, military. Oh, this is definitely for the military hometown heroes. Yes, absolutely. They are even they get oh gosh, everything is waived. Not everything is waived, but they don't have to have that full time 35 hours a week. So because veterans can apply.
Mhm.
They're away from taking the first time home buyer class as well. So, but yes, this definitely active duty and veterans can apply for hometown heroes.
Yeah, I answer her back on here. She can't. I'll respond back on the website that she's responding from, just in case. Oh, just in case she didn't get my answer.
And that's another awesome one, because VA, like USDA, is 100% financing. So, that leaves borrowers in those two categories with having to pay closing costs. So if you have, your DPA assistance, that 5% of the sales price up to the 35,000, either the lesser amount. I mean, again, you're looking at all that probably can go towards your closing costs, and you're coming with zero or just very little to the table.
Yeah, and that's a good thing. There's just so many different programs that is out there, and it's not just like you said. It's not one program fits all.
Exactly.
It just depending on where what program you're looking for and what program fit you.
Mm-hmm.
So but this is good stuff, and I hope no one else has any questions. I don't see any other questions there. I'll reach back out to those people and make sure I send them a message with the answer to their questions. But this has been just really some good stuff, and it's something that I wanted to get in depth more, in depth more about the hometowns era, and I think I have gotten a lot of my questions answers, and just like I said, I'm not a lender, so I always refer the lender, the buyer back to the lender, because I don't try to understand it, because I'm really it is not that it's not my cup of tea, but it is not my first priority to understand the lending part. If not, I would go take a lending class and be a lender. I love selling real estate. I love driving, so I concentrate on that. But I'm always one of those that always try to find out whatever I don't know. I don't know everything, but I read and I go and I take classes in order to learn more. I take a lot of classes. The amount of certificate that I got behind my name is like, when it comes time to pay my dues at the end of the year, I'm telling you, thousands of dollars out of my pocket.
Use
Because
use the certs as wallpaper.
yeah, but I put a lot of stuff I put in my I put them in my drawer, because but they're just, Michelle, where did you go? You disappeared. But this has been good stuff, and I hope everyone that is listening, and I hope everyone that asked question gotten their question answered, and everyone that is here. I was wondering where you went, Michelle.
Sorry, I just kind of popped out there for a second. Sorry about that.
It's like, what happened? You fell asleep?
Anything.
But I learned a lot today,
Good.
and got all my question clarified, along where I'm able to show, I'm able to answer some of these questions up front about most of the things that takes place. But it's been a learning curve within the last few deals, really. It's been a learning curve, but I think this is the most learning curve I've had within the last couple of months. So I'm always learning. Anyone else have any last thing to say before we end the show?
Just say thank you, Michele.
No, thank
We've
you.
learned a lot. Thank you.
I did. I really learned a lot. And then,
Yes.
there's other time you can come on and talk about other things as well. Maybe dig deeper into other topics that we don't really know about, being realtors, and you being lender. So maybe you could pick something that you think that people. There's a good place that you go online, and there's a website that says that answer the public's questions. So where you can go and says, okay, what question are the public asking? So then therefore you can come back and talk about it. But I use that a lot where I answer the public's question, because there's a lot of questions out there, you know,
Yeah.
that the public is actually asking. And it's a website called Answer the Public's Question, because I know they always have a lot of questions,
Yes.
you know, and then they usually the most question, you know, the question that they have usually the most, and they put, and you just go out and create a video about it. But we're gonna keep growing together, keep learning together. I, like I said, I love that color on you. Very
Yeah,
beautiful,
they're
very
pretty.
beautiful color, very pretty
Pretty.
color.
Oh, thank you.
You know, so I thank you for educating us and joining us. I thank Neville and Beverly for all the awesome question, and I thank the audience for with all your question and for chiming in. And I know I'll be getting questioned later, or people going to be sending me messages and things like that, but I'll be happy to share Michelle's information with you. You know, you can give them your, if you have your information on hand, Michelle, you can also give it to them as well, you know, where you can you know, they can reach out to you as well.
Absolutely.
Okay, you want to tell them how to reach you?
Absolutely. So I am with Movement Mortgage, and you can reach me at 720-937-4258, or you can reach me at my email at michele.freeny@movement.com. That's MICHELE dot F as in Frank, REEN as in Nancy Y at movement.com.
Yeah, so reach out to Michelle. Any other question that you have? Hang on, I see somebody else has another question. Okay, she said thanks. I guess she got my answer. Okay, so that's cool. Okay, so anyone else has any other question? Michelle left her information there. You can always reach out to her, directly to her. And then if not, at the end of the podcast, where the link is, you can always send a message back there, and I promise I will get that message to her. And then if you need approval or anything like that, you can reach out directly to Michelle. I look forward to answering any one of you guys' question that you may have. And Michelle, you're gone again, but Neville, any last word? Beverly, any last word before we end the podcast?
Nothing for me.
I thank you guys for watching. And remember, living in Central Florida, Viv the Caribbean team, preferred real estate brokers. If you guys are looking to take the home buyers class, please reach out to us. Neville and I make the class so much fun. So much fun. Neville and I make the class. And you will actually learn a lot. You will learn so much from taking that class about buying a home. You know, it's 3 nights. It goes from 6:30, and it goes from 6:30 to 9 each night. And it's Wednesday, Thursday, and Friday. And I thank Neville for always being there, for helping me when sometimes I'm traveling and I'm out of town. He's there to help me. So I appreciate you, Neville. I appreciate it. Thank you so much for your help. You know, guys, go out and live your best life. You never know when it's your last. Thank you for tuning in, and we look forward to seeing you next time on Your Voice Matters.